And welcome everyone to another episode of Opto Sessions. Today I have the great pleasure of introducing Angus Shillington, Deputy Portfolio Manager for the Emerging Market Equity Strategy at VanEck. Prior to VanEck, Angus also headed up International Equity for ABN AMRO. How are you doing today, Angus?
I'm great, Ed. Thanks for having us on.
And you've been traveling recently, is that right? Where have you been to?
Most recently on vacation, which was much needed. But before that, my most recent trip was actually India. We should try and check in there at least a couple of times a year.
Because you're getting on the ground floor to really get the true insights of what's happening.
Yeah, there. I mean, it's a yes is the obvious answer. We care a lot about relationships and network there. So sort of freshening that up post-COVID has been important.
Is it just India traveling to see these countries? Are you going around to other markets at EMs that you're sort of interested in?
I travel pretty extensively, mostly in Asia. I do bounce around a little in Brazil, Mexico, but Asia really takes the most of my time. And then within that, India, because of what's happening there right now, I think it's really useful to get there regularly. I think a lot of what's happening, to some extent, I mean, we're big believers in sort of pattern matching. We've seen a lot of it before, either in the US or Europe. But it always, whatever it is, whether it's a business perspective or a policy perspective, tends to roll out very differently on the ground. So, a lot of that is about understanding as things are changing quickly, how they are being perceived or how they're being invested around. So, India, as I say, a lot going on, so requires quite a lot of attention.
Yeah, of course. And as you said, today we're here to talk about the growth story in India and emerging markets a little bit more generally as well. Particularly interesting time to discuss India, given that back in April, I believe, India surpassed China as the world's most populous nation. We know that population growth is a key input to economic growth. So I thought we could start by just discussing demographic trends in India and how they're sort of influencing its position in the global economy.
Sure. I mean, I think the headlines everyone sort of understands. It's a great place to start. Over 1.4 billion people. I mean, median age is the big story. The median age is 28. 25% of the population is aged under 14 years old. And I think the first interesting point I'd make around that is that the sort of expanding younger voter base strongly favors a growth agenda. So I think one of the big risks that's always thrown out there is that, perhaps there's resistance to change and Modi gets thrown out. Maybe he will, maybe he won't. I don't know. But I think this demographic will drive a growth agenda, whatever happens. And then I think, how you broadly think about it, it's not dissimilar to the sort of baby boomer demographic in the US. It's probably more powerful. Certainly when you sort of break down sort of income levels, India on average is, I think, 1/6 of China, like a tiny fraction of the US. So all of that stuff, that sort of younger demographic driving into, more easier to bring in a mass adoption of technology, internet, that kind of stuff. So I think it all sort of pushes in a really kind of exciting wave. So I think people tend to throw up this sort of big number, but I think if you get under the number and in terms of what that younger demographic drives, it's super exciting.
Yeah. And so, I mean, and when you look at this pattern recognition, like you sort of touched upon, if you're looking back at other economies that have now sort of developed, like the US and things like this, and you talk about the baby boomers, where are we in India's growth story today? If you're relating it back to other economies that are sort of more advanced now, if we discuss the last 20 years, where has it come from, and where are we at today, and what does the future sort of hold? What point are we in?
Yeah, so I'm going to answer your pretty straightforward question with a not so straightforward answer, but I'll try and sort of lay it out logically. Where India is right now is a kind of crazy intersection of the demographic story, which is super powerful, and I think the analog, as I said, is pretty similar with the sort of baby boomers in the US. But what's running alongside of that is digitization, which I think we'll go on to talk about, but also this really kind of unstoppable flywheel that is the reform agenda. So the bit that I maybe will start, and then I'll throw it back to you, is I first sat up and took notice about 10 years ago when I met, it was one of the ex-founders of Infosys, who went on to do a give back project called Aadhaar, which was, he wanted to digitize ID, right? So nobody knew who anybody was in India. There was very little sort of in the way of paperwork, and paperwork sort of disappeared. And he felt that the catalyst to really attacking the inflation problem was digital ID. So he began a program called Aadhaar, which was sort of very basic, sort of thumbprint, retina scan ID, and that went on. Most Indians now have that, and that catalyzed, or was the platform for a lot of Modi's policies to be built on top of. So I think that's sort of maybe the starting point.
And so what policies are we talking about that have really, you think, are really impactful?
And I think this is we think about policy as accrual, right? That good policy builds on good policy. The kind of stuff that doesn't work is just sort of reactive, stop this, don't do it again kind of stuff. This is not what was going on here. This was the first thing that Modi really addressed, and it was in his first policy agenda, was reduce corruption, and that really involved extracting cash out of the cash economy. So when he came in, it was a sort of somewhat broken economy that was very corrupt. That corruption drove a pretty negative election cycle. So if you're a corrupt politician and you gather a ton of cash and you want to win the next election, you distribute that cash. So his idea was like, take that away. So he took basically the digital ID platform. He then introduced this first policy called Jan Dhan, which was everybody must have a bank account, right? So I think there was a small incentive to open a bank account, but the idea was that once you had your digital ID, you walk into a bank, you KYC yourself, either with your thumbprint or retina scan, and you have a bank account. Now, once you have a bank account, government transactions can be done without passing cash through various people's hands. But the next policy then really catalyzed, or the next two policies really catalyzed the big change. The first one was demonetization. I was there when this happened. It was insanity. Government announced, we're taking all small bills out of the economy. Large bills were allowed for a little while. And there was a deadline of, I think it was 2 weeks, that if you didn't have your cash in the bank account that he'd already set up, so there's the sequence: digital ID, bank account, cash goes into bank account, it no longer was valid, right? So it was an aggressive stance. Now, you're right.
Wow.
So now the cash is in the bank account. The guy who's the corrupt politician who's got a bunch of cash under his bed, he's screwed, right? He tries to get that in a bank account, and he's in the clink. So really, you ended up burning a bunch of that money that was used for bad political stuff, and you encourage cash to be put in the bank account. So the next step on top of that was tax reform. So it was called goods and services tax, and effectively, kind of funny story. I would check into a hotel before this happened in Mumbai. I'd spend one night there. I'd check out the next day, and it would be like 5 minutes to print the bill, because it was my one night room, can of Coke, and then 20 pages of taxes, which were completely uncoordinated, totally impossible to understand, very localized. And so goods and services tax just eradicated all that with one simple platform, of an understandable platform, federally scaled, so you could start to move stuff across borders. So when you build those three on top of each other, now the cash in the bank accounts, it can start to do sort of real things, has access to credit, You can start to scale businesses in a really interesting way. Everyone knows what tax they're paying. So the piece that sort of layers on top of this is tax revenue, right? So if you know where the cash is, and transactions are done largely digitally, tax compliance goes up. It's very difficult to avoid. Some Indians aren't that happy about it, but it is a reality. And conducting business digitally is much more efficient. So the guys who engaged that first won and showed other entrepreneurs how to do it. So I think the last piece of this, and then you can drill down if necessary, is if you dramatically increase tax compliance, you address the other big problem that India has had up until now, which is transport logistics, awful infrastructure. So, and that's mostly because their budget just couldn't handle it, and the budget couldn't handle it because the budget was underpowered because nobody was paying tax. So you increase tax revs, budget goes up, and this is what I talk about. You get this flywheel effect. So you now get plenty of cash now to build new roads, the public-private partnerships. Those roads mean better logistics. Better logistics mean lower inflation, and this thing starts to drive itself.
And for an economy that's performed really well on local stock market over the last Nifty over the last 20 years or so, why do you think it's not really had that much visibility outside of India? Why have people missed this opportunity and not really sort of grabbed it, when you could argue that China and their growth story early on had a lot more people involved in it?
Yeah, I mean, I haven't had the why question before. It's a great one. I think there are a lot of reasons. One, India sort of existed in this sort of weird parallel universe that Indian analysts, Indian investment banking heads, center of gravity for Asia was in Hong Kong facing China, and that center of gravity faced New York or London, wherever head offices were, and India just never really got the level of understanding that was required, and I think that's somewhat of the message I'm interested in talking about with anybody who's prepared to listen. So I think that's why it was considered corrupt, volatile, dangerous. But when you, for investing, not for anything else, well, maybe for some of the stuff, but when you sort of drill down into performance, and you said it yourself, was like, if you look at the 10-year returns of the Nifty against, I don't know, the S&P, it's about the same, right? Somewhere, give or take 10 percentage points of return in US dollars. I'm not giving you sort of Indian rupee to US dollars. I'm saying US dollar to US dollar. Pull that out 20 years, that's 2x, right? So India's given you almost twice the performance of the S&P. And your question is absolutely spot on. Like, why is that? And I think it's for some of the reasons I outlined. It's an ID market, meaning that it's non-domestic retail investors can't participate directly. You've got to go through an institution. And then institutionally, generally, I guess, people like us, asset gatherers, just didn't separate out that part of it until, relatively recently. So I think, all of those together gives you the why question. But I think just to sort of wrap this part, it makes no sense really, because when you think of what makes up a really powerful index, which generally is, indexes are sort of living things, right? They, good companies get smaller, bad companies get smaller, great companies get larger. And over time, that sort of living entity is sort of top heavy of the better companies. So, if you look at the S&P, and I'm going back to the S&P because it's sort of one of the sort of most popular, well-known, high-quality indexes. It's made up of a cohort of like innovative, oligopolistic businesses that operate at scale with great brand value, pricing power, great track records. And that's been the same in India, right? So, the performance numbers I laid out, 20 and 10 years, talk to that. So It's a good question. It just has been underappreciated. There are great businesses there. They return high numbers to shareholders, and that's really compounded over time. So part of the sort of point on the road we are right now is like, how do you express an investment in India or an Indian company with the ID market issue? One, and then two, I don't think it's like China to the extent that suddenly there's a huge index churn and a bunch of companies turn up and take over the index. It's the index itself has got some really great companies that will be persistently great over time.
And so, looking forward now, we discussed the demographic input factor, and also a few of the political reforms that have already passed, but maybe there's some that are going forward now that will help. What's driving India's economic growth moving forward over the next 10 years, outside
Right.
of what we've
So,
already
I mean,
discussed?
you say outside, they say, high return on equity businesses will persist, and there's a handful of banks and conglomerates and guys like Reliance are participating in the future, but it will be driven by the effects of digitization. So there's the first derivative of that, which is the great businesses like logistics businesses, like the infrastructure businesses. There's a big push into renewable energy, which is part of the budget I talked about. But as that feeds into the economy in jobs growth, that feeds into the economy, and better logistics will reduce inflation. Reduce inflation means you're probably going to get a sort of West-like reduction in interest rates over time, which means home ownership goes up, access to healthcare goes up. So it's a very sharp modernization, I think, is the trend that will be the most investable going forward. But it's not just the sort of layer one stuff that sort of seems obvious. It penetrates much deeper down into the economy.
Okay. And obviously, the digital sector, as you mentioned, is one that is particularly interesting in India. What constitutes digital in India? What sort of sub-themes come underneath that?
Yeah, I mean, it sort of reached back into the sort of pattern match we talked about before. It's everything that we have seen. What's slightly different in India is that the government have been very proactive in their participation. So, there isn't, a PayPal per se, which is a sort of privately owned transfer network. It's called UPI. It's publicly owned, and it's frictionless transfers.
Okay.
The Indian government has gone hard turn from sort of papery bureaucracy to e-applications for pretty much everything. So I think that's sort of the first part of it. But the facilitation piece is, it's the result of, I think it's going to be a lot of the good outcomes. And the result of, I mean, some of the stuff I spoke to before, lower interest rates equals, home ownership, digitization means, better connectivity with bank customers, better flow of credit to, the bottom of the social pyramid. So I think all of these things, there's no question that the businesses that are set up of pure digital, so whether it's retail or e-commerce, direct logistics, they're going to do well. It's quite difficult to access some of those directly because one sort of EM problem you tend to have is the first mover in change tends to be large conglomerates. So, some of this stuff will be buried inside of Reliance,
I got
stuff
you.
like that.
Yeah. Okay. So, what are the risks, or do you see any big risks to the Indian economy moving forward that could disrupt this sort of growth story?
People talk about the valuation risk. I really push back on that. India valuations have been pretty persistent over time. Call it 20 price earnings. Pretty static, sort of mid-teens return on equity, which should drive that going forward. I think it's more the way, the risk is, the global blow up stuff, obviously, the potential political
Yeah.
disruption, geopolitics. There's a bit of friction between India, China. That obviously sort of stands out. But other than that, I think the risk probably mostly centers on specific companies in India that will be disrupted over time. So there's been this hard belief that, mainly in the sort of consumer retail space, that certain businesses deserve gigantic multiples for not gigantic growth. And I think as time goes on and local brands start to disrupt foreign brands, direct consumer business models start to disrupt, heavy branch or store distribution networks, as multi-line retail starts to disrupt monoline retail, I think things get really interesting and really exciting. I think that's to me, index churn is probably one of the biggest risks going forward outside the sort of idiosyncratic stuff.
What about the US dollar? How does that feature? Do you see that as a problem moving forward, or given how the US has sort of managed that over the last sort of
Sure.
2-3 years?
This isn't, we pay attention to this for as a risk management tool. So my answer is not going to be directional. My answer is going to be we don't think it's a big issue, partly because there's probably some pressure on the US dollar to weaken, and partly because, over time, when you look at the data, India's relative value of its currency has tended to reflect the foreign direct investment flows. So the more people buying into the Indian market, the more stable the currency has been. So there's probably a little weakness because inflation will, to be honest, I don't. Maybe there'll be a little weakness. I would say there'll be a tendency that way. But I think stability is a pretty safe bet, and I say stability as plus minus sort of 5 or 10%.
And so I don't know if this growth story of India moving forward. Do you think we've seen peak economic growth in India, or is this still on the horizon? Like, what period are we going through here?
I'd say not even close, right? I don't think I'm not answering the question that you were asking. So let me just sort of separate that into sort of two specific issues. GDP growth as a relative percentage number. What's the biggest number that will be? We may have seen it. There's been some big numbers in the past, but I think the opportunity and the really interesting point here is compounding, right? So to me, as a sort of grizzly old veteran of markets, that is probably the most underrated value creator over time. So I don't need to throw out numbers that are exciting in terms of GDP growth. The IMF and the World Bank have done a pretty good job at 5 to 7% through 2020. So you compound that and you're at a pretty interesting place. We actually did a pretty wild study recently, which was a sort of mashup of some Warren Buffett stuff and some stuff we'd done internally, which was to look at the sort of the average rates of stock market return and how they correlate with GDP growth over time, then lay on top of that, GDP forecasts for the world through 2030. And I came up with a realistic possibility. I'm not saying a probability, a realistic possibility that India ends up as a top 3 market cap stock market, within 7 years. These are these are big numbers. So if you clip these compound 5% over a relatively long period of time, and the stock market can convert that at sort of low double digits to returns, it's a really very exciting long-term story. I'm not sort of throwing out the 100% in a year thing. That's not my thing. But over time, it's difficult to see where you're going to get better returns in that perspective.
Mm-hmm. And it's been driven largely by foreign investment flows into the economy.
It's a bit of both. So there's a very really robust sort of, again, I live in the US, sort of 401k type process called the SIP, where you can put local Indians can put relatively small amounts in. and that's become really quite a material driver of flows. But foreigners, I think, as you know, there's a lot of hesitation still around valuations. I think that will probably change over time, but there will be a wave of new issuances. I mean, there's some really interesting stuff back in the private markets that will show up pretty soon. So that will drive some flows. So I think generally positive and probably balanced.
Yeah. And coming back to the valuation point, are the valuations high primarily because they're just high growth businesses or relatively high growth businesses, and that's baked into higher price to earnings, and they're going to grow into those valuations? Is that how you see it? So they're just persistently higher most of the time?
I mean, I'm glad you asked that, because I sort of think that the way the construct of India is expensive or more expensive, it does a bit of a disservice to either new or existing investors, because it just doesn't give the picture. I mean, I think I would tend to look at a valuation in isolation, right? First of all. Secondly, I would sort of deconstruct it or decompose it into, what's the price you're paying and what the risk you're taking. So, if you sort of look at volatility, and the Indian vol is relatively low, not far off the US, and as you say, you're getting a nice growth clip with the quality of businesses that I sort of laid out with mid-teens ROEs. That deserves a valuation. So, what's your likely return? What's the risk you're taking? That, if you run that through basic academic models, the valuation of where it is right now isn't unrealistic, and it's been the same valuation for quite a while.
Yeah. That's good. And I thought we could move on to just more generally emerging markets outside of India. If there are any sort of emerging markets that also are quite interesting to you at the moment, globally, and why?
I'm going to really annoy you here, but the strategy I work on, all we think about is businesses, right? So in terms where the company piece comes in, or where the country piece comes in, is really around risk. So will this country blow up, or is there a big sort of tsunami of interest rates coming in? So to that extent, we don't have very strong views. But if you look at our portfolio now, it's pretty heavy in Brazil, pretty heavy in Mexico. So the two of those clearly have great structural long-term tailwinds. So Brazil reform, some commodity stuff. Mexico, a lot of the sort of nearshoring trend. And then there is a bunch like Philippines and Indonesia that always have this sort of nice, slow grind, long-term middle-class demographic story. And there's some excellent businesses in both of those. But then even when you come to China, I wouldn't address that with a binary yes or no question, because in any market there are great businesses, right? So I think our job is and our mission is to uncover those. When you've got as much sort of dislike for China as there is right now, dispersion of multiples is very low. All stocks tend to trade together, but even within China, there's a big handful of what I would call structural growth, compounding superheroes that are trading at really low valuations that could pay well over time. So I mean, I totally respect your question, and I've dodged it somewhat, but
No, I think that's it's a very interesting way. But it's interesting to know that even going that sort of bottom up point of view, you're seeing pockets in certain areas come up, such as Brazil and Mexico and places. They're even talking today. It was the automakers in the US that they've got the unions are demanding some pretty hefty increases in pensions, wages, etc., which they're debating whether or not that's just going to push the trend for changing the manufacturing over to sort of areas such as Mexico, where they don't have.
It's funny. I mean, I would just really comment on that through a sort of India lens, just to switch back to that very quickly. Look, I mean, if you build a business, a long time ago, using technology from a long time ago, with a cost structure from a long time ago, and you're depreciating and amortizing, fixed assets from a long time ago, you have very little room to maneuver and adapt and innovate your balance sheet and your cost structure. If you're a new business that's born in the cloud, not born in a factory, that's born with digital distribution and direct to customer type relationships, you got a good chance of making a good profit at lower than the other guy's cash costs. So I think what you're seeing in the US, you're sort of seeing everywhere. I think just in EM, because the digitization piece came later and came faster, the disruption could be more violent. I don't know.
Yeah. And I just wanted to ask about de-dollarization. Is that a trend you see persisting? There's been a lot of chatter recently between the BRICS in particular about removing their reliance to the dollar. I don't know how much they've realistically been able to split away from that, but do you see this something as a big thing moving forward, that they're going to sort of steadily remove their reliance on the dollar and price their markets in their local currency?
I tend to lean on Eric Fine and our fixed income team here, and their point is pay attention. I think when you look at any sort of policy framework that's come out of the BRIC countries in 15, 20 years, it's been kind of zero. There's a lot of friction between all those guys, both ideologically and economically. So, but I think the dollar was weaponized relatively recently, and that creates risk for non-US countries holding that asset. So I think it's definitely a risk, and we definitely are paying very, very close attention.
Thanks very much for all your wisdom today, Angus, and it's been really interesting to discuss India. Is there anything else you'd like to leave on? Do you have Twitter? Can people follow some of your commentary online, or does VanEck have a
Sure,
blog?
I'm going to leave with a couple of things. The one thing I didn't mention, and I should have done, was we've become very active in crypto. As a solution, right? So, think of us as crypto bulls. Think of us as creating products for crypto bulls, right? So, intelligently designed solutions that will give you the exposures and the custody solutions. On me, I have real problems ramping my Twitter following. I'm at Angus Shillington with no N. I'm on LinkedIn as well. So thanks for your questions.
Yeah, no problem at all. Thanks, Angus. Have a great day.
Bye.